I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Welcome to the Market Pulse. I'm Dr. B at Verified Investing. Today we're going to be talking about the idea and the concept that sometimes a loss is a win. So this will be very interesting for you if you haven't, understood this concept in the past or practiced these types of things. But I will show you what happens and what you can do in the case where you're out of the money significantly on a position and how to maneuver through that to create a smaller loss and live to fight another day. All right, so what do I mean by the idea or the concept of sometimes a loss is a win, right? So this is something that we teach in the Apex Day Trading Room. And essentially what it means is if you're in a position where you're out of the money significantly, okay, how do you maneuver through it? And really you should be changing your mind to, all right, I'm not looking to profit on this trade now. I'm out of the money significantly. Now I'm looking to dollar cost average in and then minimize my loss, okay? So this is a trade I took today in the Apex Day Trading Room. We can see this is Chewy's chart. You have one pivot here, one pivot there, and then your second pivot there. I entered here on this third pivot, all right? And you can see here that we had a nice bounce. We were in the money about maybe 1.5–2%. I was looking for a move up here to this resistance area. All right, actually probably more likely this resistance area here. All right, we were very close. We made about a 60%, of the way there. And then what happened? All of a sudden, the stock goes against us and breaks down. Okay, so what do? You have the choice to either stop out here or dollar cost average in. I decided to dollar cost average in today because the stock was off the highs by about 20–25%. So I decided to DCA in. All right. And so this is what happened. All right. This is the same chart on Chewy here. So here's the same line, right, where we broke down. And look at this. No bounces. No bounces. Just boom, boom, moving lower, 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 right? So this is the extended hours trading chart here, and there were a couple levels here coming across from previous from previous days and months, and so I probably added here, and then I think I added again down here, and then maybe once more right in this area. Okay, so I'm in a 5/10 position currently right now as we speak in Chewy. Okay, and my average is somewhere around 26.85. I think it's on one of the next screens here. And my mentality now changes, right? So I was looking, I'm going to go back to the previous screen here, and you're going to see this, right? So I was looking to make a profit here. This is a great bounce, great entry. I nailed the bottom there on this trend line, okay? And I was looking to make a profit at this point. But when the trade goes against you, you have to all of a sudden change your mind and say, okay, the trade's going against me. How do I minimize my loss? How do I go from a $2,000 loss to a $200 loss or a $500 loss? Okay, that really adds up over time. If all of a sudden you are minimizing your losses and maximizing your gains, the math really adds up. Whereas if you continue to take large losses, it really will hurt your portfolio performance over time. Okay, so let's go back to the next slide here. You can see that we formed a bottom, all right, or kind of formed a base. And what do you do at this point? You start to look, right? You start to look at the higher time frames as you start to flush for your add points, for your dollar cost averaging add points. And again, if you haven't seen the previous episodes of the Market Pulse, go back, watch those. I talk about dollar cost averaging, how it really helps you maneuver through trades that go against you. Okay, so let's go to the next slide here. Now, you want to be logical during this time. You don't want to be emotional, right? Who would you rather be, right? You'd rather be this guy right here. Relaxed, cool, calm, and collected. What is the most important way to do that? By going small, okay? Starting with a smaller position size. If you have one share in a company, that's $100 a share, and it's down 10%, not a big deal. You're down $10, okay? But if you're in your entire account or half of your account, it's a problem, right? You're gonna be emotional, and you're gonna make the wrong decision at the wrong time. You wanna sit back, be poised, relaxed, logical, and non-emotional. You really want to be acting like a robot, okay? And so that's kind of what I'm trying to train you to do for those of you who are watching. So again, don't be emotional, be logical. All right, so here is the daily chart on Chewy. Previously, that was the 1-minute chart. And you can see what I started to do here. I said, okay, it blew through my level. All right, where are the next levels where I should add? Well, here's a Fibonacci level. Right down here around $14. The price came all the way up here to 40. I entered here right around this area this morning, okay? We had a couple trend lines here. All right, there was a trend support area right there. So you start to see that you have a Fibonacci, 0.5 fib there, 0.618 there. You have all of these trend lines starting to accumulate in that area, and that typically gives you support or an area where the price will likely bounce. All right, so that's how you should start to think, how am I going to work through this trade? Okay? So this is, again, the daily chart. I've drawn in some trend lines here. All right, I call these hidden trend lines when they pierce through price like this. Here's a pivot low, here's a pivot high, and you can see the trend lines are coming right into this 25.50 area. Here's another trend line, pivot low, pivot high, pivot low, and you get right into this area. Okay, and this is about where we bounce, right in the $25 region. So let's take a look at the next chart here. And you can see this is zooming into the 1-minute chart. Now you can see these trend lines that I drew on the larger time frame. And you can start to see that Chewy bounced right here about 25.30. Okay, so 25.30, Chewy started to bounce and form a base. And the most likely reason that it formed a base was because of those trend lines that I drew on the daily chart. It's not often going to be perfect, right? Sometimes it just kisses this level, all right? This is kind of a kiss of this level, and it may not get all the way down here. So you have to dollar cost average, right? You have to dollar cost average on different trend lines and support areas. You can see there was a little wedge here that broke out to the upside. We broke out and then we retraced and moved higher, okay? So you start to kind of formulate some ideas and support patterns that help you to dollar cost average in. And then you say, okay, where's my average? All right. So here's my average, $26.85. The stock's right here at $26. Here's my average at $26.85. But the problem is there's resistance right here. There's also resistance right here. So you have to understand that when the stock gets back up to this area, okay, you'll likely you'll see something like this. You'll see something like this. So you have to make a decision. Do I want to take, a 50-cent loss per share right here at $26.50? Or do I wait until it gets up to my break even? Okay? Or do I wait until it gets to this pivot low? All right, so this is kind of what's going on in my mind. And, this is where the concept of, there's resistance here. It's already moved 4% up or, 3-4% from the lows. Probably I should be taking my money off the table, exiting my position, and taking a small loss, right? So let's say I was out of the money $2,000 down here, all right, but I'm only out of the money, say, $300 right here. Maybe I just take that loss. All right, I had wins on my other trades today. Maybe I take this loss here and I move on, right? So that gives me the chance to live to fight another day, and that's really key. If you are in too big of a position and the stock starts to flush like it did here, and you're handcuffed and don't have any more ammunition to add, you're likely going to sell down here when the stock just keeps going, right? And that's usually the worst time to sell. So what I'm eyeing here is there's a possible inverse head and shoulders pattern, okay, right here. All right, and actually this is about 30 minutes out of date, but what's happened is it came up here and now is forming a right shoulder, and potentially will have a move higher. But again, the idea is here that because I'm so much out of the money right now, or I was down here, I'm really not necessarily looking for this inverse head and shoulders to play out to the full measured move. I'm looking to just take my position off, at best break even, maybe slightly in the money, but most likely, minimizing my loss and taking a small loss. So that's the goal. So I hope this is so important, right? This is something we deal with every single day. Every trader in the world deals with these types of decisions. And it's very, very important to understand how to work through this, how to be logical, how to sit back and work through it so that you are in a better position in the long run. So very good. That is the end of the sometimes a loss is a win concept, but I did want to give you one bonus slide today. It's called the Adam and Eve pattern. This is a pattern that played out on the Walgreens chart. Okay, this is the 2-minute chart on Walgreens. I think it shows it best. And I actually called a trade in the Apex Day trading room right here. We were out in Las Vegas in the hotel room. I entered a trade right here, took profit somewhere in this area because I knew, I had the knowledge that this Adam and Eve pattern here, here's Adam and here's Eve, all right, was a very, very bullish pattern. The measured move is right here, just like an inverse head and shoulders. Measured move is somewhere up to about here. We got about 70% of that move over into this region, and then we fell, okay? So very rare pattern, not something we see very often, but when you do see it, you typically have parabolic upside, and that's what we got. So very, very interesting. I hope you enjoyed that. So I hope you enjoyed that episode of the Market Pulse. Very, very important to practice this, understand how we dollar cost average through losing positions when we're out of the money, and how we flip our minds and say, all right, this trade is likely not going to be a profitable trade. Okay, since it's not going to be profitable, how do I minimize my loss in this trade and then live to fight another day? If you haven't seen the previous episodes of the Market Pulse that up until this point, make sure you go back and watch those episodes. Go and practice these techniques. If you haven't taken the 1-minute scalpel, the course that I developed over several years, which has really helped me call winning trades on the Apex Day trading room just about every day, go and take that. It's on the website. We have a lot of interesting things on the website, different services for you to benefit from and profit, in the markets. So I hope you enjoyed that. I'll see you next week. Take care.